Good morning and welcome to the Backpacktrader training room for Wednesday, February 15th, 2021. Please note the required risk disclosure. This room is for educational and information purposes only. It is not to be considered individual financial advice. Trading of this type involves significant risk and should only be attempted with funds that you can afford to be without. All right, let's take a look at what we've got going on this morning. Okay, the YM just stopped out of a pre-market trade, so that's flat. We'll look for a new trade to start the session at 9:30. Look, soybeans is flat, still on the March contract. Volume is basically split, but it's still a little bit heavier to March. Crude oil has had one losing trade so far this morning. That was a 24 tick risk, so 48 ticks. Still watching, looking for trades there. Unleaded, if you're using, this is not part of the standard trade plan, but I've got the 200 EMA trade on here. It's one of the diamond level setups. We got that at 21 seconds after the hour. Plenty of time to get into it. And that hit both targets 1 and 2 and trailed up almost to target 4 to 68.39 from the entry at 67.33. So 106 ticks on the trailer, 41 ticks on target 1, 63 for target 2. So one and done. If you use that trade, one and done on the session. The short didn't trigger, and we have an SMA long that's triggered in. It is part of the plan if you're using those. Probably would have come up a couple of ticks. But hitting money management and target 1. Now let's see. Did we get target 1? Yeah, we got target 1. Stops at 69.19. And the market's open with a short on the YM. Should be in this. And a long on soybeans. Sorry to say, that looks like it spiked up through 1 tick. So let's take that 1527, get it up above the 20 SMA as well. Yeah, just 5 seconds on that bar, so definitely avoidable. And now you have a short, 1524. That is hanging around the entry, so definitely in that one. Short on soybeans. That is a fairly small trade, it looks like. But it's 7 ticks to target, so that's enough. And the YM with a stop and reverse at 46. Looked like it hung around right around the entry level long enough to have gotten involved. All right. Crossover filter is come off on crude, so we can take shorts. And the YM hitting money management and target 1. And stop at 942. Actually, not 944. 940, yeah, 944. Or no, 947. And it just stopped out at 947. So that's going to, that probably is not enough to get us positive. Let's see what we, and picking up. Oh, Russell got active right away. Short 12, 5 seconds on that, and then back the other way. Probably avoidable, but maybe not. Then we pick up a long that's break even. That went too fast, so that's a no trade, even though it's a break even. And we have a short that's also too fast. So no trades as yet there. All right. Unleaded hitting targets 1 and 2. Coming back to stop out on the trailer at 69.29. So that's a one and done session, however you played it. And just about to get a short set up. On crude. If it closes down, we should get a short setup. There's our short on crude. Looks like it bounced off the 200 EMA at 27. Good morning, Jeff. Good morning, Don. So unleaded is finished. So we'll look in on MNQ. Not in the long trade. Our start time is 4 minutes after market open. So that's right in these bars here. So looking for a new setup there. And still short on soybeans. So it looks like probably avoidable. Two trades too quick. Ooh, that's 7 seconds. And then we've got another wick. I would say they were probably in that one. Well, and that takes a full loss. Now we're in the short. Actually, 6 seconds. And I'm afraid that I have to count that as a second loss as well. Pound Aussie in a long trade, trying to get up to 74.70 for its money management. And with a 3.5 pip spread at that point, at the entry, I'm going to go ahead and push the target up to target 2. And soybeans hitting target 1. That'll be a one and done session there. 7 ticks on target 1, and we're still in the trade. Long setup on the Russell for trade number 3. Still valid because it never did touch the entry. And this bar will cancel it because it looks like there's our short trade. And plenty of time to get in that. 26.4 on the short. If you didn't get in, push it down a tick, 26.3, as it came right to the entry. And a short also on the micro NQ. 594, 578.5. We got to 578.25. If you didn't get filled on that one, push it down to 578 even. And looks like that's stop number 3 on micro Russell. So that is the end of that session. And triggering into the short on the MNQ. And we have another short. Yeah, we picked up the short on crude. And that's meandering about, trying to break through the 200 EMA. YM looking for another trade, I think. We went from 924 to 946, so 44 ticks. And we got a target 1 of 26. So that puts us down 18. Picked up 1 on the stop. So we're down 17. Yeah, we need another trade there. And soybean stopping out for 1 tick on the trailer. That's 3 additional positions. So 10 tick net this morning on soybeans for a one and done session. And a stop and reverse. That's a full stop out. And a stop and reverse to long on the MNQ. And strong move up. Money management. Stop at 593.75. Actually, it's going to be a little higher than that because our stop was 594. So 594.25. stop and reverse adjustment was 1 tick because of the stop on the original trade. Pound Aussie just missing money management. Stuck between the 50 EMA and the 20 SMA. Let's see which way it breaks. And a break-even stop out on the micro NQ. So 1 loss, 1 break-even. That stop out at 594.25. Crude still on the March contract. Unleaded was on the April contract. I didn't mention that. I saw it. The volume on it was hot. We had already transitioned yesterday. And a close below the 20 SMA on Pound Aussie. And our short trade on the YM just above the 50 EMA filtered out. Entry was at 974. 50 EMA was also at 974. So if you take that down to 972, it's a valid short. And I think that's exactly what I would try to do. Short on the micro NQ. And crude making its way down. Set a new, definitely got a new swing low. It's still looking like it wants to test the EMAs again. And a stop and reverse setup on the Pound Aussie. Make that 74.47. Triggered unadjusted, but not adjusted. So for the moment, we're still, and that's a full loss on the short on the MNQ. That's 2 losses, and we're in a long. So this could, depends on which way this goes. Still in the pound Aussie long. And then in the long on the micro NQ. Trade number 4 there. Crude testing the 200 EMA again. It's 10 minutes till, or 11 minutes till 10. No 10 o'clock mini session because we do have the crude oil inventory report at 10:30 today. And there's a new short on the YM, but we're still in the, if you adjust around the 50, we're still in the larger one. Money management, a new session high from the MNQ. And if you waited for the new short, you would have just gotten stopped out. But if you were in the prior short, you're still in the trade on the YM. And the MNQ stops out for another break-even trade. So far, pound Aussie still in the long trade. The stop and reverse remains valid because it did trigger in unadjusted. Even if with this bar closing, that being if it when it closes, will be the second bar above the balance line, but stop and reverse will remain valid. Short trade on the pound, or not pound, not on the pound Aussie, on the micro NQ. And crude down to 78.17 again, and now pushing through it. This may be the push we need to get to money management on this. Is this going to be big enough to get us 21? Yes, it is. It's going to be 54 ticks if we can get both targets. That will get us positive. And money management. Oops. Money management on the crude trade and target 1. Make sure you activate your trailing stop for the second position. That's looking good so far. That it's getting close to target 2 already. And the short trade on MNQ. Success at target 2 and 3. And the YM, if you took the earlier YM trade, target 1 achieved, that would have been 33 ticks with our adjustment. Targets 2, 3, and 4 on the MNQ, trailing to 564.25. And target 2 on crude, that does get us positive by 5 ticks for the session. The pound Aussie getting close to money management on the long trade. If we get to money management, that will take the stop and reverse off the table. Just shy again. And the MNQ stopping out. So that's a solid win. Stopping out 564.25. Ooh, and we got a long trade. Gave us plenty of time to get into. And the YM stopping out on the trailer. Well, we were only down 17. That's definitely enough to get us positive on the earlier. If we adjusted around the 50 and took the earlier filtered trade. I don't trade the 370. I typically trade the 8 tick momentum or 8 cent momentum. All right, the 8 tick range on my Ninja Trader. But I will be looking at the 377 for the crude report, for the inventory report at 10:30, as well as the 8 cent momentum. We'll look at the 377 tick counterpunch and the 8 cent momentum on Spotlight there. I tip in the room here. The chart is a Spotlight 8 tick range, which is equivalent to the 8 cent momentum bar for TradeStation. The 377 is something we have used for quite a while in the past on Counterpunch, although for the most part, Troy has switched even on Counterpunch, has switched most things over to range bars because they're more indicative of price, more indicative of price action. All right, full loss on that MNQ trade, so that's loss number 3, and that ends that session. So done there. And we did get to money management on that pound Aussie trade. And it stopped out at break even. Now, technically, that short trade is still valid if we come back down to the entry. Since we ticked through the entry just a little bit, I would keep the 74.47 stop and reverse entry. But we didn't stop. That trade did not stop out. So the Russell and the MNQ both done with 3 losses. Good trade on the last trade on the MNQ. And now we're getting to move up again. It's a 10 o'clock move going back up. So we will see what happens. But we're not involved. Getting only a break even on the pound Aussie. We're still looking for another trade. So let's see. Where are we? Yeah, pound Aussie is the only thing left. Okay, so if you didn't take this one, you took a full stop there. Yeah, you took full stop there. So that was 34.68. Already down 17, so it'd be 85. You picked up a 37 tick target and 936 from 968, 32. So 32 and 37 is 69. So we netted 1 tick off of those 2 trades. So if you didn't take this one, you're still down 16. You get a long stop and reverse to short, full stop out, unfortunately. That's not for another hour yet, Jeff, isn't it, Jeff? That's 11 o'clock. And I'll be over there as soon as I finish the crude inventory session. But hopefully I will be done with the crude inventory session by 11 o'clock. So I should be there when he starts that. So we are in a get in sync position at the moment. Okay, that's going to push our money management down a couple of ticks too to 35. Same settings other than changing to the 8. Primarily, Troy is using the 8 tick range bar, but we still look at 377 for the inventory report. It's just not, he's changed from that being his primary there because it has somewhat changed character. It's much bigger trades than it used to be, and it's moving much slower than it used to. Since the advent of the micro crude. But yeah, Troy has pretty much transitioned most everything that he's doing over to range bar charts, even on Counterpunch. Unless it's his swing trade stuff, which is often usually daily or weekly charts usually. The major reason Troy stayed with 377 for so long in the crude inventory report was it normally finished faster than Spotlight did. That's interesting. The 377. Yeah, I think the micro crude has definitely split the trading quite a fair amount between the micro and the full contract, and it's tended to slow both of them down a little bit, especially on the tick charts, because the tick charts are trades versus pure price. A tick is a trade. So if you've taken numbers of trades away from the full crude and moved them over to the micro crude, you're not getting the number of trades there that you're getting on the full contract, but you're also getting much fewer trades on the full contract. So the 377 ends up slowing down on both charts. which is another reason for the transition over to range bars. But Troy had primarily transitioned to range bars on everything else except the crude inventory report already, well before the micro crude came out. But it did definitely had an effect on the market. All right. Yeah, not much to look at. I'll stick around another 5 minutes or so for questions, and then I'll. Actually, I wouldn't. I would go ahead to the range bar on the crude report as well. I think Troy has stayed with the 377 because he's transitioned to spot using the range bar on Spotlight for the crude report rather than the 377 tick counterpunch for his trading as well. So if it were me, that's what I'm doing is I'm trading using Spotlight with the 8 tick momentum bar. But given the choice between the 377 and the 8 tick momentum, I think I would go with the 8 tick momentum. It's going to give you smaller trades typically, but it's a whole considerably more controlled risk because the 377 trades have gotten to be a bit large. Yes, you can still use the 8 cent momentum on counterpunch. That's what I was saying. On counterpunch, I would still go that direction because it's going to control. Yeah, nothing changes in the settings basically. You just change the chart. Change it from the 377 tick to an 8 cent momentum. The 8 tick momentum bar is going to give you trades that average in the 20 to 24 tick risk. Versus what's happening now with this considerably larger size trades on the 377. But it also means you have considerably more risk. If you want to work with larger risk than yeah, some will be smaller. Most will be in that 20 to 24 tick range. A few will be more than that when it takes an additional bar or two to get across the signal line or something like that. But being a 3-bar setup, your X factor is going to be with a maximum 3-bar. Your X factor is going to be 26 ticks plus your stop and entry offsets for risk. Unless you have a larger one because of having to use additional bars to get past the signal line. But of course, if you get overlapping bars, you're going to get less than that. Yeah, that at this point, that's what I've noticed too. Is the 377 is creating significantly larger trades because it's getting expensive. It's doing two things. It's getting expensive and it's exposing you to market moves over a much longer period of time. Now, depending on how you like to trade, that may or may not be the right thing for you. But yeah, it's taking a significantly larger account size to trade the 377 tick now. Yeah, and that's one of the things that I like to see. One of the reasons that I like the 8-tick range bar or the 8-cent momentum, because it does typically get in and out faster than the 377 does now. I think a lot of what's happening on the 377 now is the microcrude has siphoned off a lot of the smaller retail traders, so you're getting more large trades, but not as many trades, nearly as many trades. So you're not getting nearly as many ticks as you used to. All right, folks, it's 17 after 10, so I'm going to call it a morning on this one and get ready for the inventory report. So we will see everybody back in just under 15 minutes.